So I'm sitting in this Starbucks yesterday, just minding my own business, scrolling through my phone, when I overhear this conversation at the table next to me. Two guys, probably in their 30s, and one of them is literally, literally pounding his fist on the table. And he goes, "Dude, I don't get it. I've got the best trading strategy in the world. I've back tested it, I've optimized it, I know it works, but somehow I keep losing money." His friend just sits there nodding and says something that made me almost choke on my coffee. He says, "Maybe the problem isn't your strategy. Maybe the problem is you." Now, here's where it gets absolutely fascinating, because what these guys just stumbled onto is the exact same revelation that Mark Douglas had back in 1981. You know Mark Douglas, right? The guy who wrote Trading in a Zone? Well, if you don't know him yet, buckle up, because you're about to discover why this book has literally transformed more trading careers than any other book in existence. See, Mark wasn't always this trading psychology guru. Oh no, he was just like you and me. Actually, he was worse off than most of us. The guy had a successful career in commercial insurance, thought it was hot stuff, and decided to try his hand at trading full-time in 1981. Guess what happened next? He lost almost everything. Everything. But here's the beautiful thing about rock bottom. Sometimes it's the most solid foundation you can ask for, because what Mark discovered during those dark months of losing everything changed not just his life, but the lives of thousands of traders around the world. What he discovered will absolutely blow your mind. It's not about having the perfect strategy. It's not about reading charts better than everyone else. It's not even about having inside information or being smarter than the next guy. It's about something so fundamental, so basic, yet so overlooked that 95% of traders never even realize it exists. Your mind. Over the next 40 minutes, we're going to take a journey together, a journey that will completely transform how you think about trading, about risk, about success, and honestly, about yourself. By the time we're done here, you'll understand why the smartest people often make the worst traders, why being right can actually cost you money, and why the secret to consistent profits has absolutely nothing to do with predicting the market. Are you ready? Because we're about to enter the zone. Let me start with something that's going to make you uncomfortable. Everything you think you know about successful trading is probably wrong. I know, that's a bold statement, but stick with me here because Mark Douglas spent over 2 decades proving this exact point.
You see, for decades, and I mean decades, traders have been fighting the wrong battle. They've been preparing for a war that doesn't even exist. What do I mean by that? Well, back in the 1970s, everyone, and I mean everyone, swore by fundamental analysis. Study the economy, they said. Understand supply and demand. The market is rational. Prices reflect true value. You know what that sounds like to me? That sounds like someone who's never actually tried to trade real money in real markets. Because here's the thing. Markets aren't driven by logic. Oh no, they're driven by something much more powerful and much more unpredictable. Human emotion, fear, greed, hope, despair. These are the real forces that move prices every single day. So then the 1980s roll around and technical analysis becomes the golden child. Charts, patterns, indicators, surely these would unlock the market's secrets, right? And you know what? Technical analysis was better. It focused on what the market was actually doing instead of what some economists thought it should be doing. But even with perfect technical skills, traders were still failing. Left and right, people who could read charts like Shakespeare could read English were going broke. Why? Because there was this gap, this massive invisible gap between knowing what to do and actually doing it. You could have the most beautiful setup in the world, but if fear whispered in your ear just as you were about to click buy, you'd hesitate. If greed clouded your judgment when you were sitting on a winner, you'd hold too long and watch it turn into a loser. Mark Douglas calls this the psychological gap. And honestly, it's where most traders live their entire careers, stuck in this purgatory between knowledge and execution. But here's what Mark discovered, and this is where it gets really interesting. The market doesn't create your emotional pain. Your mind does. The market doesn't make you money or lose you money. Your decisions do. The market is just there. It's completely neutral, just providing information. But your brain? Your brain assigns meaning to that information based on your fears, your hopes, your past experiences, your ego.
And that's where the real battle is fought. Not on the charts, not in the economic reports, but in the space between your ears. The most successful traders, the ones who make it look effortless, they're not the smartest ones in the room. They're not the ones with the most complex systems or the fanciest computers. They're the ones who've mastered their own minds. They approach every trade without fear, without recklessness, with complete confidence and discipline. They've learned to think differently. They've entered what Mark calls the zone.
Now, let me ask you something, and be honest here. Why did you start trading? I mean, really, what was it that first attracted you to this crazy game we call the financial markets? If you're like most people, there were probably two things that hooked you. First, the money, obviously. I mean, who doesn't want to make money sitting at home in their pajamas, right? But the second thing, and this is the one that most people don't like to admit, was the freedom. Trading offers something that most of us have never experienced in our entire lives. Unlimited freedom. Think about it for a second. From the moment you're born, society is imposing rules on you. Go to school, sit in this desk, raise your hand before you speak, get a job, show up at 9 a.m., do what your boss tells you, follow the company policy. But trading? Trading says, screw all that. You make the rules. You decide when to get up, when to trade, when to take a break. You decide how much to risk, when to enter, when to exit. You are the CEO, the employee, the risk manager, and the decision maker all rolled into one. It's intoxicating, isn't it? But here's where it gets dangerous, and I mean really dangerous. That same freedom that attracts us like a magnet is exactly what destroys most traders. Why? Because we're not prepared for unlimited freedom. We've been conditioned our entire lives to have structure imposed on us from the outside. Mark Douglas shares this incredible insight.
Many traders unconsciously using the market to fulfill childhood impulses that were denied or suppressed. Remember when you were a kid and you wanted to touch something, but your parents said, don't touch that? Or when you asked a million questions and got told, stop asking so many questions? Well, guess what? Those unfulfilled impulses don't just disappear. They sit there waiting for an opportunity to express themselves. And the trading market is like the ultimate playground for every suppressed impulse you've ever had.
The need to be right, the thrill of risk, the desire to rebel against authority, the urge to prove you're smarter than everyone else. Without proper internal boundaries, without self-imposed structure, these impulses turn traders into their own worst enemies. They overtrade because they're addicted to the action. They chase losses because they can't accept being wrong. They turn winning trades into losing trades because they get greedy. They skip obvious setups because they're afraid of losing. But here's the thing that Mark realized, and this is absolutely crucial. The market isn't your enemy. The market doesn't care about you, your bills, your ego, or your desperate need to be right. It's completely indifferent. Your undisciplined mind is the emperor. So what's the solution? Well, Mark lays out some safeguards, and honestly, these are non-negotiable if you want to succeed. First, you must create rules and stick to them. Not suggestions, not guidelines, rules. And you must stick to them, especially when you don't want to. When every fiber of your being is screaming at you to break them, that's exactly when following them matters most. Second, take complete responsibility for everything. Stop blaming the market. Stop blaming your broker. Stop blaming the news, the algorithms, bad luck, or anything else. You are responsible for every single decision you make. Every entry, every exit, every win, every loss, all of it. Third, and this one's tricky, recognize that occasional wins can be more dangerous than losses. Why? Because they create what psychologists call intermittent reinforcement. It's the same mechanism that makes gambling so addictive. You get just enough random rewards to keep you hooked, even when your overall strategy is fundamentally flawed. The market isn't trying to hurt you, but your own mind? Your own mind will sabotage you faster than you can say stop loss. Here's a truth that's either going to liberate you or absolutely terrify you. You are 100% responsible for every single trading result you experience. Not 99%, not mostly, 100%. Not the market, not your broker, not the news, not the guy on CNBC, not some algorithm, not luck, good or bad, you. Now, I could already hear what you're thinking. Come on, that's not fair. What about market manipulation? What about flash crashes? What about unexpected news events? And you know what? You're absolutely right. All of those things happen. But here's what Mark Douglas figured out. When he talks about taking responsibility, he's not just talking about acknowledging your losses. Oh no, he's talking about something much deeper. a complete mental transformation. You have to reshape your entire relationship with trading, with risk, with success, and failure. Winners don't blame. They don't make excuses. They don't point fingers. When they lose, they ask, "What can I learn from this?" When they win, they stay humble and focused. They understand that both outcomes are just information, nothing more. But here's what most traders do instead, and maybe you'll recognize yourself in this. They take credit for their wins and blame external forces for their losses. I made money because I'm smart and I saw that setup coming. But then, I lost money because the market manipulated against me. This creates a toxic cycle. Loss leads to emotional pain. Pain leads to blame. Blame leads to an adversarial relationship with the market. And an adversarial relationship with the market leads to more losses. Mark identifies 4 types of traders, and honestly, most people cycle through all of these at different points in their careers. The consistent winners. These are the traders we all want to be. They've mastered their minds and treat each trade as nothing more than a probability. Win or lose, they're emotionally neutral about the outcome. The consistent losers. These traders are predictably unprofitable. They trade emotionally, react impulsively, and always find someone or something else to blame for their results. The boom and busters. Oh, these guys are fun to watch from a distance. They experience these wild swings, huge wins followed by devastating losses, because they can't manage their emotions consistently. And then there are the addicted. These traders are hooked on the thrill of random rewards. They're essentially gambling, but they convince themselves it's trading. Which one are you? More importantly, which one do you want to become? Because here's the path to becoming a consistent winner. And this is going to sound counterintuitive. Stop trying to be right. Start trying to be consistent.
The market is neutral. It doesn't care about your mortgage payment, your ego, or your desperate need to prove you're smarter than everyone else. It simply provides opportunities. Your job, your only job, is to take advantage of those opportunities without emotional attachment. But most traders can't do this because they've turned trading into something personal. They've made it about their intelligence, their worth as a person, their ability to predict the future. And when you make trading personal, you've already lost. Mark talks about this beautiful concept. What if you could approach every trade with complete emotional neutrality? What if winning didn't make you feel like a genius and losing didn't make you feel like an idiot? What if you could just execute your strategy over and over again without the emotional drama? That's what taking responsibility really means. It means accepting that the only thing you can control is your response to whatever the market does. And when you truly accept that level of responsibility, something magical happens. You stop fighting the market and start dancing with it. What if I told you that consistency isn't something you achieve, but something you are? Like, it's not a skill you develop over time, but a state of mind you cultivate moment by moment. Most people think consistency is about having a good day, then another good day, then stringing together a bunch of good days until voila, you're consistent. But that's not how it works at all. Mark Douglas reveals something that's absolutely profound. Winning and consistency are internal states. Just like happiness or confidence or peace, they come from within, not from external market conditions. Think about the best trade you ever made. I'm serious, take a second and really think about it. How did it feel? It felt effortless, right? Natural, like you were in perfect harmony with the market. No struggle, no second guessing, no emotional drama. You saw the setup, you took the trade, you managed it properly, and you got out at the right time. Easy. That's what Mark calls trading in the zone. A state where trading becomes as natural as breathing. But here's the paradox that trips up most traders. The harder you try to force this state, the more elusive it becomes. Why? Because you're focusing on the wrong thing. Most traders focus all their energy on being right about market direction. Is it going up or down? How high will it go? When will it turn? But successful traders focus on something completely different. They focus on being consistent with their process. Douglas introduces this revolutionary concept, thinking in probabilities instead of certainties.
And honestly, when you really get this, when you truly internalize this concept, everything changes.
Professional traders understand that any outcome is possible on any given trade. They don't need to know what's going to happen next to make money. They just need to execute their edge consistently over time and let the probabilities work in their favor. Here's the beautiful truth. When you truly accept that anything can happen,
you eliminate fear. When you eliminate fear, you eliminate hesitation. When you eliminate hesitation, you can act on your opportunities without internal conflict. But, and this is where most people get confused, accepting risk isn't the same thing as taking risk. Taking risk means you're still emotionally attached to the outcome. You're hoping, praying, wishing that this particular trade works out. Accepting risk means you're completely comfortable with losing on this specific trade because you know your edge will play out over a series of trades. This is where most traders fail. They think they're risk takers because they place trades and put money on the line. But deep down, they're terrified of being wrong. This terror creates what Mark calls mental resistance. And mental resistance leads to all kinds of trading errors. Hesitation when you should act because you're afraid of losing, overtrading when you should wait because you're afraid of missing out, jumping the gun when you should be patient because you're afraid the opportunity will disappear, moving your stop loss when you should take the loss because you can't accept being wrong. The solution? Adopt a mindset of let's see what happens instead of I need to be right. Approach each trade with curiosity instead of attachment. Be interested in the outcome without being invested in it. When you can do this, when you can truly trade with this level of emotional neutrality, you enter what Mark calls the zone. And in the zone, trading becomes almost boring. There's no drama, no emotional roller coaster, no ego involvement, just consistent execution of a statistical edge. But don't mistake boring for easy. It takes tremendous mental discipline to execute mechanically when your emotions are screaming at you to deviate from your plan.
Prepare to have your reality completely shattered. The market doesn't create your emotions. Your perception of the market creates your emotions. I know that sounds like some new age philosophical nonsense, but stick with me because this insight alone can transform your entire trading career. Mark Douglas unveils this truth that changes everything. The market is completely neutral. It generates information without any emotional charge whatsoever. It's just numbers on a screen, lines on a chart, volume bars, price action. You assign meaning to that information based on your beliefs, your experiences, your expectations, your fears, your hopes. Picture this scenario. The market drops 50 points. Trader A sees this and gets excited because he's been waiting for a pullback to enter long. Trader B sees the exact same 50-point drop and gets terrified because he's already long and watching his position go against him. Same information, completely different emotional experiences. Why? Because they're perceiving that information through different mental filters. Your mind is like a computer running software. But what if that software has bugs? What if it's programmed with outdated beliefs, past traumatic experiences, fear-based thinking patterns, and ego-driven needs? Mark explains that we don't see the market as it is. We see the market as we are. Our past experiences, our current beliefs, our emotional state, all of these act as filters that distort market information before it even reaches our conscious awareness. This is why two experienced traders can look at the exact same chart and see completely different things. One sees a beautiful breakout setup with limited risk and huge profit potential. The other sees a trap, a fake breakout that's going to reverse and take out all the stops. Who's right? Well, here's the thing. They're both right, and they're both wrong. The market doesn't care what either of them thinks. It's going to do what it's going to do based on the collective actions of millions of participants. But their perceptions will determine how they trade, and their trades will determine their results. So how do you debug your mental software? How do you learn to perceive market information objectively, instead of through the lens of your fears and biases?
First, you have to recognize that every emotional reaction you have to market information is telling you something about your internal state, not the market state. If you're getting frustrated watching a stock grind sideways, that frustration isn't coming from the stock. It's coming from your expectation that it should be doing something different. Second, you need to cultivate what Mark calls emotional neutrality. Approach each piece of market information with curiosity instead of attachment. Ask, what is the market showing me, instead of how can I make the market do what I want? Third, stay open to information that contradicts what you expect or want to see. Your mind has this amazing ability to filter out information that doesn't fit your current beliefs.
But the market doesn't care about your beliefs. It's going to show you what it's going to show you, whether you like it or not. The market is like a river. It flows where it wants to flow. You can't control the river, but you can learn to navigate it skillfully. You can read the currents, understand the obstacles, position yourself in the right places, but you can never, ever make the river flow in a different direction just because you want it to. When you truly understand this, when you really get that your emotional experience of trading is created by your perception, not by the market itself, you can start to take control of that perception. And when you control your perception, you control your emotional state. And when you control your emotional state, you can make clear, objective decisions based on what the market is actually showing you. That's when trading becomes what it was always meant to be, a game of probabilities played with complete emotional neutrality.
What if the key to trading success isn't predicting what the market will do, but surrendering to what it might do? Mark Douglas introduces us to what he calls the uncertainty principle. And honestly, this is the most fundamental truth about markets that you'll ever learn. Anything can happen at any time, for any reason, or for no reason at all. Let me say that again because it's so important. Anything can happen. The market has literally infinite ways to express itself because it's influenced by millions of traders, each with their own unique beliefs, motivations, emotional states, financial situations, time horizons, risk tolerances. At any given moment, just one trader with enough capital or influence can completely change the direction of the entire market. This isn't chaos, it's just the natural order of free markets. And fighting against this truth is like trying to fight gravity. You might win a few battles, but you're going to lose the war. Professional traders don't predict the market, they respond to it. They don't impose their will on the market, they flow with its movements. They've learned to think like the market thinks. And how does the market think? Well, here's the thing. It doesn't. The market doesn't think at all. It simply reflects the collective consciousness of all participants at any given moment. It's completely indifferent to your personal situation, your needs, your hopes, your fears, your bills, your dreams. Mark reveals these 5 fundamental truths that create what he calls a probabilistic mindset. And honestly, if you can internalize these 5 truths, really make them part of your belief system, you'll never struggle with trading psychology again. Truth number 1, anything can happen. We just covered this, but it bears repeating because most traders spend their entire careers trying to find certainty in an inherently uncertain environment. Truth number 2, you don't need to know what will happen next to make money. This one blows people's minds because it goes against everything we've been taught about success. But think about it. Casinos don't know which specific bet will win or lose, but they make consistent profits because they understand probabilities. Truth number 3, there's a random distribution between wins and losses for any given edge. Even if you have a 70% win rate, you could easily have 5 losses in a row. That doesn't mean your edge is broken, it just means you're experiencing the random distribution of outcomes. Truth number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. It's not a guarantee, it's not a crystal ball, it's just a statistical advantage that plays out over time. And truth number 5, every moment in the market is unique. Even if a setup looks exactly like something you've seen before, it's not the same. The players are different, the conditions are different, the emotions are different. Each moment stands alone. When you internalize these truths, and when you truly believe them at a cellular level, something magical happens. You stop fighting the market and start dancing with it. You enter what Mark calls the now moment opportunity flow. In this flow state, you're not worried about being right or wrong. You're not attached to any particular outcome. You're not trying to force the market to do anything. You're simply present, alert, and ready to respond to whatever opportunities the market presents. This is the market's perspective, neutral, objective, flowing. It doesn't judge outcomes as good or bad. It doesn't get emotional about price movements. It just is. And when you adopt this perspective, you align yourself with the natural rhythm of the markets instead of fighting against it. The uncertainty principle isn't something to fear, it's something to embrace. Because within that uncertainty lies unlimited opportunity. And when you can dance with uncertainty instead of wrestling with it, you become truly free as a trader. Here's a paradox that's going to completely change how you think about trading. Each individual trade has a completely random outcome. But a series of trades following a consistent edge can produce predictable results. How is that possible? Mark Douglas explains this through the casino analogy. And honestly, this analogy alone is worth the price of admission. Think about a roulette wheel. The casino has absolutely no idea which number the ball will land on for any single spin. None. It's completely random.
But over thousands of spins, the casino knows exactly what's going to happen. They're going to make consistent profits because they have a mathematical edge built into the game. The casino doesn't care about individual outcomes. They care about the statistical advantage playing out over time. They don't get emotional when someone hits a jackpot. They don't get frustrated when they have a bad hour or even a bad night. They just keep running their edge, spin after spin, bet after bet, with a mechanical precision. This is exactly how professional traders think. They don't predict individual trades. They don't need to be right on any specific trade. They just execute their edge consistently, over and over again, knowing that the probabilities will work in their favor over time. But here's where it gets tricky. Unlike a casino, traders often sabotage their own edge. How? Through emotional interference. The casino never gets emotionally attached to individual bets. They never revenge bet after a big loss. They never chase their losses. They never change their rules in the middle of the game because they're having a bad day. They simply execute their edge with robot-like consistency. Traders, on the other hand, well, we're human. And humans do stupid things when they get emotional. We skip trades after losses because we're scared. We overtrade after wins because we're overconfident. We change our strategy midstream because we're impatient. We risk too much on sure-thing trades because we get greedy. All of this emotional interference destroys our edge. Mark reveals the solution, and it's both simple and incredibly difficult. You must learn to think and act like a casino, mechanical, emotionless, focused on the long-term statistical outcome instead of individual results. This requires a fundamental shift in how you define trading success. Success isn't about being right on any single trade. Success is about consistently executing your edge over many trades. Period.
When you truly grasp this concept, when you really understand that trading is nothing more than a numbers game played over time, trading becomes almost boring. There's no drama, no emotional roller coaster, no ego involvement, just consistent execution of a statistical advantage. But don't mistake boring for easy. It takes tremendous mental discipline to execute mechanically when your emotions are screaming at you to deviate. When you had 3 losses in a row and your fear is telling you to skip the next trade. When you've had 3 wins in a row and your greed is telling you to double your position size. This is where most traders fail. They understand the concept intellectually, but they can't execute it emotionally. They know they should think like a casino, but they end up acting like a gambler. The difference between a casino and a gambler? The casino plays the probabilities. The gambler plays the emotions. The casino is patient. The gambler wants instant gratification. The casino accepts short-term losses as part of the game. The gambler takes every loss personally. Which one are you? More importantly, which one do you want to become? Because I can tell you this, when you learn to think like a casino, when you can execute your edge with mechanical precision, regardless of recent results, when you can accept each outcome with conflict emotional neutrality, that's when you truly begin trading in the zone.
Your beliefs are the invisible puppet master controlling everything you do in the markets. They determine what you see, what you ignore, how you interpret information, and what actions you take. And here's the kicker. Most trading problems aren't technical problems. They're belief problems. Think about this for a second. If you believe that the market is out to get you, how do you think that affects your trading? Every loss feels personal. Every winning trade that turns into a loser feels like confirmation that the market is working against you. Every time you get stopped out at what seems like the worst possible moment, it reinforces this belief. But here's what's really happening. Your belief is causing you to unconsciously look for evidence to support itself. It's like having a detective that only investigates crimes that confirm his theories and ignores all the evidence that contradicts them. Mark Douglas reveals something that's absolutely crucial. Most of our limiting beliefs about trading were formed during emotional experiences. Maybe you had a big loss early in your career that made you believe trading is too risky. Maybe you missed a huge move because you hesitated, and now you believe opportunities always pass me by. Maybe you had a string of winners followed by a devastating loss, and now you believe what goes up must come down. These beliefs become self-fulfilling prophecies.
If you believe opportunities always pass you by, you'll probably hesitate on good setups. If you believe what goes up must come down, you'll probably exit winning trades too early. If you believe trading is too risky, you'll probably position too small to make meaningful profits. But here's the empowering truth that Mark discovered. Beliefs can be changed. They're not permanent fixtures of your personality. They're learned patterns that can be unlearned and replaced with more empowering beliefs. Douglas introduces the 5 fundamental truths and 7 principles of consistency, not as mere concepts to understand, but as new beliefs to install in your subconscious mind. The 5 fundamental truths. Anything can happen. You don't need to know what will happen next to make money. There's a random distribution between wins and losses. An edge only indicates higher probability, not certainty. Every moment in the market is unique. The 7 principles of consistency. I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I'm willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles, and therefore, I never violate them.
But here's the challenge. Knowing these principles intellectually isn't enough. You can memorize them, you can understand them, you can even agree with them. But if you don't internalize them at a belief level, they won't change your behavior when you're under pressure. This is why Mark suggests writing them down and reading them every single day. Not just once or twice, but every day until they become part of your mental DNA. Until thinking in probabilities becomes as natural as breathing. Until accepting risk becomes as automatic as looking both ways before crossing the street. Remember, your current beliefs took years to develop. They were reinforced through repetition and emotional experiences. Changing them won't happen overnight. But with consistent effort and conscious attention, you can reprogram your trading mind for success. The goal isn't to eliminate all beliefs. That's impossible. The goal is to adopt beliefs that support consistent trading success instead of beliefs that sabotage it, to replace fear-based beliefs with probability-based beliefs, to swap ego-driven beliefs for process-driven beliefs. When you do this, when you align your belief system with the realities of trading, everything changes. You stop fighting yourself and start working with yourself. You stop being your own worst enemy and start being your own best ally. And that's when the real magic happens. That's when you discover what it truly means to trade in the zone.
What exactly is a belief? Mark Douglas explains that beliefs are like mental energy with the power to shape your reality. They're the operating system running in the background of your mind, automatically processing information and generating responses, without you even being aware of it. Think of beliefs as invisible software programs. They run continuously, filtering every piece of information you encounter, deciding what to pay attention to and what to ignore, what to interpret as threatening and what to interpret as opportunity. Beliefs have some fascinating characteristics that most people never think about. They seem absolutely true to the person who holds them. They automatically reject information that contradicts them. They generate emotions that feel completely justified, and they create the lens through which you interpret every single experience. In trading, your beliefs determine everything. What patterns you notice and which ones you miss. How you interpret price movements. What actions feel comfortable and what actions feel terrifying. How you respond to wins and losses. Whether you see opportunity or danger in market volatility. Let me give you a concrete example. Let's say you believe the market always reverses right after I enter a trade. If you hold this belief, what do you think happens? Well, you'll probably enter trades with the expectation that they're going to move against you immediately. This expectation creates anxiety, which makes you more likely to exit at the first sign of trouble, often right before the trade would have worked out. And what happens when you consistently exit trades prematurely? You consistently miss out on profits, which reinforces your original belief that the market works against you. See how that works? Your belief literally creates the reality you experience. But here's the beautiful thing, and this is what gives me chills every time I think about it. Beliefs can be changed. They're not hardwired into your DNA. They're not permanent features of your personality. They're learned patterns that can be unlearned and replaced. Mark reveals the process for changing beliefs, and honestly, it's simpler than you might think. First, you have to become aware of your current beliefs.
This means paying attention to the thoughts and emotions that arise when you're trading. What runs through your mind when you see a setup? What do you feel when a trade moves against you? What stories do you tell yourself when you have a losing day? Second, you have to challenge limiting beliefs by actively looking for contradictory evidence. If you believe you're unlucky, force yourself to write down examples of times when you were lucky. If you believe the market is rigged against small traders, find examples of small traders who've been successful. Third, you consciously adopt new, empowering beliefs and reinforce them through repetition and action. This is where those 5 fundamental truths and 7 principles come in. You don't just read them once and forget about them. You make them part of your daily mental diet until they become automatic. But here's what most people don't understand about belief change. You can't just think your way into new beliefs. You have to act your way into them. Beliefs are strengthened through experience, not just through intellectual understanding. So if you want to believe that anything can happen in the market, you have to start acting as if anything can happen. That means predefining your risk on every trade. It means having a plan for multiple scenarios. It means not being surprised when the market does something unexpected. If you want to believe that you don't need to know what will happen next to make money, you have to start trading without trying to predict outcomes. Focus on following your rules, not on being right about direction. The goal isn't to eliminate all beliefs. That's impossible, and it's not even desirable. The goal is to upgrade your beliefs to ones that support your success instead of sabotage it. When you do this work, when you consciously choose beliefs that align with market realities instead of ego-driven fantasies, trading becomes a completely different game. You stop fighting yourself and start working with the natural flow of the markets.
This is where everything we've talked about comes together. Mark Douglas outlines the complete mental transformation required to think like a consistently successful trader. And honestly, what he reveals here is going to challenge everything you think you know about trading and probably about yourself. Most people come to trading with what Mark calls social conditioning, beliefs and mental patterns that work perfectly fine in normal social situations but are absolutely toxic in the trading environment. In regular society, being wrong is often embarrassing, costly, or even dangerous. So we develop these strong psychological needs to be right and to avoid being wrong at all costs. We learn to defend our positions, to argue our point of view, to prove that we're intelligent and competent. But in trading, the need to be right will absolutely destroy you. The fear of being wrong will paralyze you. The desire to prove you're smart will make you do incredibly stupid things. Mark identifies 4 primary trading fears that plague most traders: fear of being wrong, fear of losing money, fear of missing out, and fear of leaving money on the table. And here's the crazy part. These 4 fears create this vicious cycle that traps most traders in mediocrity forever. Fear leads to hesitation. Hesitation leads to missed opportunities. Missed opportunities lead to impulsive revenge trades. Impulsive trades lead to losses, and losses reinforce the original fears. Around and around it goes. The way out? Embrace what Mark calls the uncertainty principle and accept some counterintuitive truths. You can be wrong about market direction and still make money. How? By cutting your losses quickly and letting your winners run. By position sizing properly, by having a systematic approach that works over time, regardless of individual outcomes. You can be right about market direction and still lose money. How? By entering too late, exiting too early, risking too much, or not managing the trade properly. Being right about direction is only one small piece of the puzzle. Missing out on one opportunity means you're available for the next one. The market provides unlimited opportunities for those who are patient and disciplined. But if you're stuck in a losing trade or beating yourself up over a missed trade, you're not mentally available for the next opportunity. Leaving money on the table is better than giving back profits. You can never sell at the exact top or buy at the exact bottom, but you can develop a systematic approach to taking profits that ensures you capture a meaningful portion of every winning trade.
But here's the thing. Thinking like a trader means adopting a completely different relationship with risk, uncertainty, and outcomes than most people are comfortable with. Normal people avoid uncertainty. Traders embrace it as the source of all opportunity.
Normal people fear being wrong. Traders are completely indifferent to being wrong on any individual trade. Normal people get emotional about money. Traders treat money as nothing more than a tool for keeping score.
This transformation doesn't happen overnight. It requires conscious effort, consistent practice, and often some form of professional guidance or mentoring. But when you achieve it, when you truly think like a trader instead of like a normal person trying to trade, everything changes.
You stop taking losses personally. You stop getting excited about individual wins. You stop trying to predict what the market will do next. You start focusing on what you can control: your risk, your position size, your entry and exit rules, your emotional state. And that's when trading becomes what it was always meant to be: a game of probabilities played with complete emotional neutrality and mechanical precision. A business where you have a statistical edge and you execute that edge consistently over time. That's what it means to think like a trader.
And when you can do that, you're ready for the final stage of development.
Mark Douglas reveals that every trader must progress through 3 distinct stages to achieve consistent success. And understanding these stages, I mean really understanding them, can save you years of frustration and tens of thousands of dollars in losses. Stage 1 is what he calls the mechanical stage, and this is where every serious trader absolutely must begin. I don't care how smart you are, how much experience you have in other fields, or how naturally gifted you think you are. Everyone starts here. In the mechanical stage, you're learning to build self-trust in an unlimited environment. You're learning to execute a trading system flawlessly, without deviation, without creativity, without second guessing. You're training your mind to think in probabilities instead of predictions. And you're developing an unshakable belief in your ability to be consistent. Now, most traders, and maybe this is you, try to skip this stage. They want to be creative and flexible right from the start. They want to use their intuition, their market feel, their ability to read between the lines. But Mark warns that this is a recipe for disaster. The mechanical stage is like learning to drive a car. You have to first master the basics, checking your mirrors, using your turn signals, following traffic rules, staying in your lane, before you can handle complex traffic situations or drive in bad weather. In trading, you have to first prove to yourself that you can follow simple rules consistently before you can trust yourself with discretionary decisions. Because if you can't follow rules when there is no pressure, how can you possibly follow them when there's money on the line and emotions are running high? This stage is all about building what Mark calls self-trust. You need to know without any doubt that when you have a valid setup and your rules say to take the trade, you will take the trade. No hesitation, no second guessing, no creative interpretations. Once you've mastered mechanical execution, and I'm talking about months or even years of consistent rule following, then you can move to stage 2, the subjective stage. In the subjective stage, you begin to add discretion to your trading. You use everything you've learned about market behavior, pattern recognition, and risk management to make judgment calls about when to take trades and when to pass. You start to develop what people call market feel. But here's the danger. Having tasted success in the mechanical stage, many traders become overconfident when they reach the subjective stage. They start taking bigger risks, bending their rules, trusting their gut over their system. And often they end up giving back all their profits and reverting to emotional trading.
The key to succeeding in the subjective stage is maintaining the discipline and objectivity you developed in stage 1, while gradually expanding your decision-making authority. You're still following rules, but now you have more flexibility in how you apply them. Stage 3 is the ultimate goal, the intuitive stage. This is where you're truly trading in the zone. Your decisions feel effortless and natural. You're completely in tune with the market's rhythm. You're fully present in each moment, responding to what the market is showing you, without any internal conflict or emotional interference. In the intuitive stage, you're not trying to apply what you know. You simply are what you know. Trading becomes an extension of your being, like a master musician who no longer thinks about playing individual notes, but simply expresses pure music through their instrument. But here's the crucial point that most traders miss. You cannot skip stages. Each stage builds the foundation for the next. Most traders fail because they try to jump straight to stage 3 without mastering stages 1 and 2. It's like trying to perform surgery without going to medical school. You might get lucky once or twice,
But eventually, your lack of fundamental knowledge and disciplined training will catch up with you. Mark emphasizes this over and over again. Be patient with your development. Master each stage completely before moving to the next. Don't be in a rush to graduate to the next level. Your trading account will thank you for taking the time to build a solid foundation. The mechanical stage might seem boring or restrictive, but it's where you develop the mental muscles you'll need for the rest of your trading career. The subjective stage might seem exciting because you're finally using your judgment, but it's where most traders get overconfident and blow up their accounts. The intuitive stage might seem like the promised land, but it's only achievable by those who've done the hard work in the previous stages. Which stage are you in right now? Be honest with yourself. Are you trying to skip ahead? Are you rushing the process? Are you giving yourself the time and patience you need to truly master each level? Because here's what I can tell you. The traders who are willing to go through this process, who are willing to be patient with their development, who are willing to master each stage before moving to the next, these are the traders who eventually achieve the holy grail of consistent profitability. They're the ones who discover what it truly means to trade in the zone.
We've covered a lot of ground together, haven't we? From understanding why smart people often make terrible traders, to discovering the invisible forces that control our trading decisions, to learning the 3 stages of development that every successful trader must go through. But here's the thing, and I need you to really hear this. Knowledge without application is completely worthless. The concepts we've discussed aren't just interesting ideas to think about. They're not cocktail party conversation starters. They're principles to live by, beliefs to internalize, and practices to master. Mark Douglas spent over 20 years researching, testing, and refining these concepts. He worked with thousands of traders, from complete beginners to seasoned professionals. And you discovered that the principles in trading in the zone are universal. They apply whether you're trading stocks, forex, futures, or crypto. They work whether you're a day trader or a long-term investor. They're relevant whether you have a $1,000 account or a $1 million account. But here's what Mark also discovered. The zone isn't a destination you reach once and stay there forever. It's a state of being that you must cultivate every single day through consistent practice and unwavering discipline. Some days, you'll be completely in the zone. You'll execute your trades with perfect emotional neutrality. You'll follow your rules without hesitation. You'll accept wins and losses with equal equanimity. You'll feel like you're dancing with the market instead of fighting it. Other days, you'll fall back into old patterns. You'll get emotional about a loss. You'll hesitate on a good setup. You'll chase a trade that got away. You'll second guess your system. And that's okay. That's human. That's part of the journey. The question isn't whether you'll have setbacks. The question is how quickly you'll recognize them and get back on track. How fast you'll return to thinking in probabilities instead of predictions. How soon you'll remember that each trade is just one event in a series of events. So let me ask you, are you ready to do the work? Are you ready to take complete responsibility for your trading results? Are you ready to accept the uncertainty of individual trades while trusting your edge over time? Are you ready to trade mechanically when your emotions are screaming for drama? Are you ready to stop being a victim of the market and start being a master of your own mind? Because that's what this is really about. The market isn't your enemy. It never was. It's just a neutral arena where your internal development gets reflected in your external results. Every trade is a mirror, showing you who you are in that moment. Every loss is a teacher, showing you what still needs work. Every win is a reward for doing the mental and emotional work required. The path isn't easy, but it's simple. Follow the 5 fundamental truths, live by the 7 principles of consistency, progress through the 3 stages of development, trust the process even when it's uncomfortable, especially when it's uncomfortable, and remember, you already have everything you need to succeed. You have the knowledge now, you have the principles, you have the roadmap. The only question is whether you'll use them. Will you remain in the struggling majority, fighting the market and fighting yourself? Or will you join the successful minority who've learned to think in probabilities, act with discipline, and trade with complete emotional neutrality? The choice is yours. The market is waiting. Your destiny as a trader is in your hands. Welcome to the zone. Welcome to your new life as a consistently profitable trader. Welcome the freedom that comes from mastering your own mind. The journey continues, but now you know the way. Now you have the map. Now you understand what it truly means to trade in the zone. Go out there and make it happen. The market is full of opportunities for those who are prepared to see them. And now, finally, you are prepared. Trade well, trade wisely, trade in the zone.